Hey guys, this is Randy Finney with Right Side of the Chart. Today is Thursday, January 25th, 2018. In this video, we're going to take a look at the home building stocks. This is ITB, the iShares Dow Jones U.S. Home Construction Index Fund. You can also look at and trade XHB. Personally, I like ITB a little better as more of a direct play on home builders and construction. XHB is very top heavy in things like Home Depot and Lowe's. Those are also components of ITB, but I believe there's a bigger exposure directly to the home builders and ITB. So that's my preferred proxy. This will probably be added as an official trade idea. I just took a starter position. I left today right after the post I put out this morning on the broad markets. I had a dentist appointment at 10 o'clock, and at right at 10 o'clock, as I was arriving there, I guess the new home sales numbers came out, and they were pretty disappointing. The consensus was for 680,000 new home sales. The consensus range was sit between 635,000 to 710. We came in at 625, so we missed not only the consensus, we fell below the low end of the consensus range, and not the end of the world, but I came home and I had just price alerts went off like crazy right afterwards. So a lot of these stocks, it's funny because I think it was just yesterday, either yesterday or the day before, I always track this sector with a lot of others, but I started to become interested and I marked up all the charts, revised a lot of the charts, I should say, set price alerts on those, and therefore, coincidentally or not, those went off today. And I'll be honest with you, I wasn't even looking at the calendar aware that the new home sales numbers were coming out. So, anyways, it was a pleasant surprise to come home to see these stocks breaking down. Um, and I don't think I think that it's early in the stage of a breakdown or a correction here. There's still very objective entries. Like I said, I just shortly before starting this video took a starter position in ITB, and I plan to, as I often do, sniff through there and probably layer in some individual home builders because I often say if I can get the call on a sector right, much more often than not, I can drill down within that sector, whether I'm bullish or bearish on the sector, and then find the most bullish or bearish stocks within the sector and outperform that way. Here's a list of the holdings. Now, I've sorted these not by market cap. If we go by market cap up here, you'll see there's the big boys, Home Depot, Lowe's, Sherwin-Williams, all that. But what I've done is as quickly as I could, I went through this list today and flagged the names that stand out to me. So here's only, 14 stocks. We'll cover those 14 stocks. That'll give you some trade ideas. That I can get out there right now in case somebody wants short exposure. I know right now most people have zero desire to short this market, but these look good to me, so I'll share them, pass them along for what it's worth. All right, first up is Sherwin-Williams. They are now sorted by market cap, and where that might come into play in your trading is typically the larger market cap of a company, the less volatile it is. It's not a hard and fast rule, but it for the most part, the word Sherwin-Williams is a $40 billion company, and so you're not going to see the price swings that you'll see on some of the smallest components within ITB. I'm looking at a couple that are only 380 million, 524 million, and those are going to swing a lot more wildly because they're not as liquid. So SHW, what I see in the charts, this was actually an official short trade earlier or last year, 2017. We hit the first target right here, 331. We shorted on a breakdown of this bearish rising wedge. We had negative divergence, and the stock has come full circle. I mean, wash, rinse, repeat. We never hit the second target. We reversed right off that first target. That's fine. And then it exceeded the suggested stop right here, which was also a breakout. I believe that was a suggested stop line right there, which would have been above those new highs. So the stock broke out and had a nice rally from there. Since that breakout, it ran up another 20%. But it's come full circle. You can see a well-defined uptrend line right here. You can see the clean negative divergence, which is now confirmed, and you see an impulsive breakdown today. Everything that I like to see in uh, a short entry for a trade, as far as a breakdown on the stock goes, that impulsive nature, not just limping through there. And given the trend in the broad market is still very strong, I wouldn't be shocked if this, snaps back up within the wedge. or above trend line. I don't expect that, but if you want to play it safe, you wait to see a daily close below this trend line here. You might want to try to short on a back test, but I think there's enough hot air in these stocks. As I said, I've taken a starter position. If they do kick back, maybe back test. And again, I don't have this one yet, but I may add some of these individual names. So let's go ahead and move on. I don't have all the price targets shown at this time, but if you are interested, just drop me a line and I'll give you my thoughts on it. I can just show you real quickly some support levels. We do have horizontal support right about where we hit today. I can see some reactions there. And my first, my minimum downside target, of course, we do have to take out that 416-ish support, would be 339, right around there, a little bit above 339. And I can also see a reaction here. But I think ultimately this one can come down to this level, 384, and possibly, quite possibly, come in and back test that breakout down here all the way around 362. And that is Sherwin-Williams SHW. Next up, DHI, DR Horton. You can see this one you don't have. Well, yeah, actually, I take that back. You do have divergence at the high. That's a common theme on most of these stocks. You have a divergent high. Looks like from that last point right here, that final thrust up, put in that steep divergence right there. You have some horizontal support here. We'll call it a support range down to about 49.20. You can see some reactions, but a lot of thin air. I like this volume at price histogram. Usually you can't see these on the video. I have it muted down, but when I turn that up, this shows you that there were very few trades, and you can see that there. The stock had a very strong rip, and this is a big support shelf. So if things get ugly in the sector and we start to see some weakness in the broad markets, that would certainly help. You don't have to have the broad markets rolling over for a correction in a niche sector such as the home builders, but it would certainly help. Then this would be my downside target here. And that's a drop of, if we get down to that support shelf, the top of that volume at price histogram, that the support zone there, that's almost a 32% drop. So potentially a lot of meat on the bone on that one. Let me go ahead and turn that down. Okay, all right, get that back to where I like it. All right, so that's DHI. A few more and we'll wrap this up. NVR, NVR Inc., just a clean, super well-defined price channel. Look at this channel, at least the uptrend line, I should say. We had a price channel here, very well-defined, kind of popped above that channel and then started diverging. So you can see here what the story was. We had a divergent high here. It never played out, nor did we ever have a breakdown. This stock stayed above trend without even a false breakdown. And then in this most recent thrust up here, put in very strong negative divergence. Those divergences are confirmed and a very impulsive breakdown. We have a gap down and an impulsive candle. So at best, this one might want to kick back. But a lot of these stocks, and I'll just tell you, when you have an uptrend like we've had in the broad market, like we've had in the semiconductors, like we've had here in the home builders, typically when you go into, we're not exactly, this stock didn't run parabolic, but we have a near vertical run in the markets. Those type of strong, extremely overbought, extremely bullish sentiment rallies, they usually end with a bang, not a limp down. And so what you have here is a gap down that traps a lot of longs in that we're watching this trend line. I mean, if you anybody remotely using technical analysis can identify this trend line. It doesn't, this one's pretty clear. So I think there were a lot of stops placed below there, a lot of longs that were just riding the trend up. If it works, keep going until it doesn't work anymore. And now they've gapped down below their stop. So they're just waiting to get out of that one. And that's why a kickback rally, if we get it, would be great, but we may not. And at bare minimum, I think this one's coming down here to 29.73. It's obviously a high-priced stock. But that would be a drop of about, from where we're at now, about another 13% or so. And we'll just have to go from there. We'll see what the sector is doing. OC, Owens Corning, yeah, obviously not a home builder. You guys are probably familiar with Owens Corning. That's the, if you look up in your attic, you see the pink insulation, the rolled sheets of fiberglass insulation. That's Owens Corning. They do a lot of building materials. And obviously they're bottom line is closely tied to the housing market and residential and commercial construction for that matter. So there it is. You can see a pretty well-defined uptrend line. This one is not triggered yet. You can see the negative divergence down below. I think it's just a matter of time. I see an alternative uptrend line right here, which would be an ideal target. And ultimately, I think this one may come all the way back down here to the 68 to 86 level. If it works its way down there over time, that's about a 27% drop. Lennar, another home builder, negative divergence, pretty well-defined uptrend line, hasn't cracked yet, but we're starting to roll over pretty impulsively. A lot of these stocks are down, 2, 3, 4% or more today. And here's one that I think has pretty much run its course. And remember, guys, birds of a feather flock together. So if you're going to see, you know, the home builder sector, they're probably all going to roll over together. They all went up together. They all tend to fall down together. We're looking at a rising rate environment with this, equity markets on fire, commodities heating up finally. It is all but a certainty the Fed is going to have to put the brakes on with interest rate hikes to stave off inflation. And that's not good for the housing market. We all know that. So PHM is up next. Pulte Homes. There's your steep divergence right here, just like you had negative divergence back here in early 2017. That led to a drop back then of, give you that number, that was a 12% correction. Doesn't look like much, but that 12% drop right there in short order. And that's the nice thing. If you can get these short trades, stocks tend to fall much faster than they rise. That 12% drop wiped out gains that took many months, several months at least, to build. And here's a pattern I'm looking at now. So this one drops pretty much a little bit below today's lows. It's going to break down below this little price channel here and probably come and visit. This would be my first target. This is a pretty well-defined uptrend line, so we'll probably bounce off there. And again, these are all, most of these stocks had this breakout down here, which is about 30% or so lower, 27% on this one. And that is my, what I call if things get ugly target. So we'll just have to see how the charts pan out. If this sector continues to, exhibit weakness, we see more of these stocks break down in the coming days and weeks. LI, Lennox International, most of you probably heard of that company as well. AC units, things like that. So another supplier to the home building industry. And you can see negative divergence. It's broke below and it's snapped back and it's been riding up, back testing this trend line. So not one of my favorites, but we do have some decent targets here we can look at. I do think it's coming back down. I think it'll fall again with the rest of the sector. So you're looking at minimum, I think, is about a 10% drop on this one and possibly more. TOL, Toll Brothers, nice clean bearish rising wedge. You take this line here, which shows you the divergence down low below on the momentum indicators, and here's a well-defined uptrend line. We've broken down. We're fighting. It's fighting right now. The day isn't over. Again, like I said, if you want to play it safe, you might not have as favorable an entry, but if you want to wait to see these things close below the trend line on a daily basis, that will increase the odds that the trade plays out. This one does have support not too far below, about 48.55. There's a myriad of possibilities with any trade, but this one you could see something like this. If it continues down, it's at 48.55, get a back test. That would be your next objective entry. And a break of 48.55, whether it happens on a snapback rally or whether we just go down through it, is the next objective short entry. And I think this one comes all the way down here to, the 40, 41-ish range at least. And that's TOL. CAA, Cal Atlantic Group. This one broke out. You can see we had reactions back here. It stopped there and then boom, gapped up above it. That was very bullish. Big gap up above resistance. And that has set up this very steep bearish rising wedge pattern. You can see the trend line right there. You can see it capturing all these reactions, capturing these reactions here, and then boom, a very red impulsive candle. Everything you want to see on a breakdown. So this one looks legit. Again, anything can happen, but I don't see this one regaining that trend line by the close. I see more downside in this stock. And based on that steep ascent, it's probably going to fall pretty quick too. KBH, KB Home, there's an ascending price channel right there. Breakdown today, an impulsive breakdown. The stock is down about almost 3%. There's your divergence there at the high, negative divergences. And KB Homes, I don't have a target on this one, but I think it's safe to say over time it's working its way back to 26.36 somewhere, or 24.36, somewhere in that area right there. A few more to go. TPH, Pointe Group. This one broke out right here. We had 1, 2, 3, and then boom, finally made it. Broke out, a little back test, and then off to the races. So 14.20, if this one wants to look good longer term. It'd be nice to see it come back to this level, but I can tell you this would certainly be a first target for a swing trade. It is broken down. This is an impulsive breakdown. It is clearly below this clean bearish rising wedge pattern that was confirmed with divergences. So even from where we're at right now to that 1678 target, that's about almost a 9% drop. If it continues down to test that breakout back here at 1420, that's about a 22.5% drop from current levels. So there's one that looks good too. Oh, and by the way, uh, again, I can't reiterate this enough. We are in the thick of earnings season, so make sure to check earnings on the positions that you're going to take, whether you're going long or short. You don't want to go long the day before or a couple days before earnings, unless the chart clearly indicates. Sometimes I will take a stock in front of earnings. If the chart is clearly bullish or bearish and I expect an upside or a downside break, I might do that, but just be aware of that. Especially when trading these individual stocks and some that can move. Some of these stocks, not these home builders. I've seen it in a good or bad day, a double-digit move, but easily these things can go up or down 5-6% or more in a day, and you don't want to have a gap against your position. So just do your own due diligence. And remember, on the front of the site, front page, there is a link to the earnings calendar that you just type in the symbol up top. It'll tell you when they're scheduled to report. MTH, you have a nice uptrend line here. You can zoom in here, you can see a breakdown, back test, and now we're rolling over impulsively. So this one looks to be headed lower. You have your first support right here, about 48.20-ish, 48.30-ish maybe. Next support down there, about 46.80. Those can all be targets, and just have to study this chart a little further to give you my preferred target. LGI Homes, nice, clean bearish rising wedge pattern, breakdown, little kickback rally so far. You did have divergence. Again, I don't have all these charts fully annotated at this point, but you can see it down there. That's what I like to see for these highs. So there it is. The sector is in what I call alignment, especially with the individual home builders. Again, if you short the ETF, if you short ITB or XHB, you're shorting home builders, but you're also shorting retail stores. The Lowe's, Home Depot. You're shorting building materials and other companies as well. So, to the best of my knowledge, I don't believe there's a pure play for home builders as far as an ETF goes. So you may have to pick some of these individual names and make your own little quote unquote ETF. By that I mean don't pick one. That one may pan out, it may not. What you want to do is spread your money, half dozen or a dozen of these names, small amounts. Allocate how much exposure you want to the sector overall, and then spread that money out among the names that you like best. Again, and if you don't want to do that, just stick with the ETF. MHO, that's MI Homes. There's your steep divergence, negative divergence at the highs. Here's a little minor trend line. If that one breaks, I can tell you with a high degree of confidence this would be my first price target right here, right around that, call it 29.20. I always cover my shorts just above the actual support level. But you can see a lot of reactions there, and that's sort of a breakout. You can see the impulsive candle once we broke out of that level. That helped validate that as a significant resistance level. And in technical analysis, once resistance is broken, it then becomes support. So I think that's a natural target. And there's also a thin zone. Again, you look at the volume price histogram, which I like to use, and you can see right there a thin zone on a stock. It's similar to a gap. When you have a gap, you don't have any trades there, so you wouldn't have any bars. But there's your thin zone from this line right here down to this line. And just like gaps, thin zones once entered tend to become backfilled. So if you can get down below 32.66, there's a very good chance that we'll go here and backfill that thin zone down to about 29.17. Okay, that's it. That's the 14 stocks that stand out right now. In addition, again, to the ETF, I may put this on as an official trade just to get something out there. And keep in mind when I cover a sector and there's a dozen or more stocks that I like, there's just too many to put on as official trade ideas. It's hard enough to track the trade ideas that are out there and post these updates, remove them from one category to another. So that's why I do these videos. And again, if you want to keep it simple, use the ETF. It mitigates your risk, especially during earnings season, because if you have any one single stock that has a big gap one way or the other, uh, that will be those gains or losses will be mitigated by all the other stocks within the ETF. So there's ITB, there's your first two targets, and again, I think it could work its way down here at about 35.20 if things get ugly. And at the very least, you look at this rising wedge, I think there's a good chance it comes down here to that 41.78. So we'll just say at this point in time, my preferred swing target is at 41.80-ish level, and that's about a 7% drop. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.